Hey, it's Rebound Monday after Friday's tough day. We had an impromptu Friday show. Dow dropped just about 1,000 points. All the major averages were off over 2.5%. On Friday, we came into the weekend thinking, what's going to happen? Dow drops almost 500 points right after the open today. And then we start to rebound. And you want to know why we rebounded? I'll show you now. Hold on, that's not it. This is it. Here's why we rebounded. Okay. Because Apple, Amazon, Meta, Google, Alphabet, Microsoft, and Nvidia all rebounded. The majors, the FANG plus M rebounded, the big heavyweights. That's what pushed the market back up. They became oversold. Interest rates were down a little bit. It made for a good relief rally. Is it more than just a relief rally on the way to lower lows? Listen, we never really know for sure until after the fact. And we do have massive earnings coming up, massive amount of companies. It's like over 160 S&P 500 companies are reporting this week, including Apple, Amazon, Alphabet, just the whole lot of them. Meta, which is Facebook. So we're going to see what these companies have to say. It could set the stage for a pretty dramatic rally, or it could set the stage for a downturn. But I think a lot of the downside has been factored into these stocks. So, but that if you really want to know what happened, that's what happened, and that's why we rallied so hard. Now, while you're watching this, if you have any questions, words of wisdom, those are always appreciated as well. Words of encouragement, let me know. Hit me up in the comments. Give us a thumbs up, a heart, applause, whatever reaction is available to you, depending on which social media platform you're watching. We'll talk a little bit about Twitter and what it means for you, which is not a whole of a lot. I see Michael out there, dead cat bounce. You know, I think until proven otherwise, yes, it's a dead cat bounce. Again, until proven otherwise. It doesn't change a lot for me personally, probably not for you either. We're long term investors. Money that you need over the next year or for big goals should already be set aside in cash and shouldn't be in the market anyway, up or down market. And, that's what we do, right? Personal finance is the guide. That's our guide. I think I just lost camera one, so I'm gonna. I took off camera one for the weekend for a project over the weekend, and I must have lost some of the settings. But the settings are going to they're going to like back on the I guess the display mode when you first buy the camera. That's a bit of a pain in the you know what. All right, no big deal. We'll fix it. But let's get ready to roll the intro. We've got a couple of things to talk about, give you an update. We did this impromptu thing on Friday, a live stream on Friday, and what we talked about was, why was the market down? What we're watching for. We'll just go into that a little bit, but I don't want to get into like a whole negative pity party thing today. What I want to do is remind you of some of the positives that we've been waiting for the market, and why I think they're here. And now you just have to be patient. Look, it's a lot easier to be patient when you know something good is going to happen, as opposed to not knowing at all. We'll talk about that as well. So here's the intro, and stick around. Hit me up with your questions in the comments, and it's going to be a fun show. And we're back. If you're just joining me, I'm Mitch Goldberg. You're watching my live stream, Be the Boss of Your Money, which is all about taking control of your personal finance, getting your stuff together, from investments, financial plans, estate plan, you name it. That's what we talk about here. Today, we're coming to you from camera number 2, because camera number 1 is just not cooperating today, such as the world of technology. So let's take a look at a couple of things. Let's pipe in some music. Yeah, you like that? Usually put that in the beginning, but we'll put that in now, okay? Here, We'll just cut that out. I just wanted to make sure that we have that. All right. So we talked about why the market's up, but let's talk about what happened last week and what we're looking at for. Okay. First of all, inflation due to supply shocks, food. Supply shocks because of for food because of the war in Russia, in Ukraine, because of Russia. So, Ukraine is the breadbasket of Europe, and Russia and Ukraine supply about 40% of the world's wheat. That's just a huge amount, a lot of natural gas. So, the supply chains are all messed up. China has their COVID shutdowns, and it's getting even worse over the weekend, getting worse today. So that does not bode well for a lot of commodities. That could be good, though. Commodities come off, and oil is definitely coming off. So that could actually be a good thing. Maybe if inflation goes down enough, if prices of commodities goes down enough, maybe that'll help soothe the Fed's worries. That's one way to look at it. Look, we have to find good and bad and everything, but I'm looking for the good right now. Okay. The other thing is, Fed policy. Will the Fed get a little quicker, get a little softer? The next Fed meeting is May 3rd and 4th, but May 4th, May the 4th be with you, is at about 2:15 Eastern time is when the Fed's going to announce we're expecting a half a point increase in the Fed funds rate, and maybe they might, come out and say expect a few more 50s or maybe even a 75. We have to see what they're going to say. This is all short term thinking, by the way. Long term, this is not going to be what makes or breaks your personal finance and your dreams. Just to let you know, this is just fun. This is the fun stuff to talk about to me anyway. This is the interesting stuff. Okay, so what else do we have? We have Twitter. So Twitter accepted a bid from Elon Musk. What's Elon Musk going to do with Twitter? Well, he's known to be a libertarian, and I think he likes pandemonium. He likes let me move this over. He likes a bit of a free fall. So what's he going to do with it? It's really tough to say what he's going to do with Twitter, but the big question really is he going to let Trump back on the platform or not? That's what people want to know. Now, Twitter has its rules, and if you violate the rules, you get kicked off the platform. Now, a lot of people are wondering or thinking or suggesting or believing that the rules are not being applied equally to everybody. I think Musk is a type of guy, and I think this is generally agreed, that he will apply the rules to everybody. Maybe even take the rules off and make it a free-for-all. We'll see how it goes. I know a lot of people were upset with Twitter and got off of Twitter. A lot of people like what was going on. A lot of people didn't like what was going on, but ultimately people just didn't like Twitter. It just became a cesspool of hate. I was on Twitter years ago, and I was actually a big Twitter bug, and that was my thing. That was like my main social media. But after a while, I was just like, it was not my happy place anymore. I like LinkedIn and Instagram. By the way, while you're watching this, give us a follow if we're not connected already on social media. Okay. You can catch us on Instagram, LinkedIn, Twitter, Facebook, YouTube, wherever you get your social media. That's where we are. So, and we're broadcasting live to all of them except Instagram. I could live stream to Instagram too. I just would need to set up my cell phone on a tripod in front of my desk. Maybe I'll get into that as well. But I like to switch cameras and look around. So I'm not the type. I don't like to just look at one camera the whole time. I like to do things like this: switch the cameras around and so forth. Okay, I love doing that. Okay, so let's just get on with it. All right, that's why the market went up. But there's something that people forgot to talk about, and that is the wave of the millennial generation that are now in their low 40s. Okay, millennials, we've talked about this for years and years, how when the millennials come of age, they're going to be not too dissimilar from their parents. They're going to be buying things. Their tastes are going to be different, and their tastes are what's going to determine which stocks work, which stocks don't. They will determine, especially American millennials, will determine in large degree, the future of the global economy, kind of like how their parents did, the boomers. And behind them, we have the zillennials. And there are more millennials and boomers. There are at least as many zillennials, Gen Zers, as there are boomers. And the my generation, the Gen X, we're kind of like I think we're like the forgotten generation. Like, people are like, "What are you? Are you do you identify more with boomers, or do you identify more with millennials?" And I mean, me personally, I can identify with both, just because I can. So I'm not gonna, just only identify with one. I can really identify well with both. But we have this giant bulge in the population that is coming of age. Millennials are, they're on their second or third child. They have two cars, sometimes a third car. They like to buy stuff. They like to collect stuff. They like to collect cars and other other expensive ticket items. And it's a generation whose time has come. What do you think there's such a shortage of housing inventory in this country? Because millennials are now having families and they want to buy a place. They don't want to just live in their, in their parents' basement. That's got to go by this whole thing of millennials who live in their parents' basement. That's you guys have to dispense with that. That was maybe when they first got out of college, yes, but not anymore. But if we think about the demographics of what millennials are going to change, it's pretty powerful and it hasn't gone away. And I feel like there was such a big topic, there was such a big topic for so long in the financial media. And now all we can talk about is the price of gas, inflation, and interest rates. And, you know, what happened? Did you guys all forget that we have some positive things going on also? So I think that's what happened. And I think we have to get back to that because eventually the good news will start to creep back in and the bad news, the endless drumbeat of war in Ukraine, etc. These things will start to fade. I don't mean to sound callous, by the way. These things will start to fade in the background, and investors will start to focus on making money again. And that's what I see happening. So I'm not giving up on the positives. Investing takes a certain amount of optimism because you don't know what's going to happen next. You don't even know if your investments are going to work out. But you have to have some kind of deep level of optimism to be an investor. And when somebody is not an investor, I do meet people who just they never invest. The thought of their account going down is too much for them to bear. Everything is speculative. Around every corner is another economic disaster just waiting to happen. And they'll always be willing to say, I told you so every time the market goes down. You say, how'd the market do today? Like the same people they ask me, oh, how did it do today? Like where they know damn well that it was a lousy day. And I'm like, oh, here we go again. Where were you 10 years ago, 15, 20 years ago? Great. You missed that whole rally. And 20 years from now, we'll be saying the same thing. But every time the market goes down, the same people will say, oh, well, how did it do today? Or the market went down a couple of points. It's you have to feel bad for people like that. They display such a personal lack of optimism. It's you feel bad for them. It's like, is there anything good in your life? Do you believe anything positive can happen? I know people are motivated by reward, money, which can buy things, and you've got management of companies that are motivated to build companies, to hire people, to create good jobs. That's who I'm betting on. I'm betting on that spirit, that human nature. Okay, that's what we're betting on when we invest in stocks. We don't know when the good returns will come, but we know they'll come. It could be 5 years, it could be 10 years, it could be ups and downs in between them. There will be ups and downs between now and whatever time that is that you make money in the market. The other thing, I think people got spoiled. People got so used to making money so quickly, especially coming out of the pandemic or during the pandemic. And there were so many new investors. I'm talking about you guys, the Robin Hoodies, the Robin Hood Army. And you're like, oh, it's so easy. I'm so smart. Look, I'm telling you, I had people um, coming up to me and say, hey, Mitch, you should hire me. We should work together. Look at my portfolio. Look how good I'm doing. Yeah, and your $1,500 portfolio in a massive market bounce, all of a sudden you're doing good. I mean, give me a break. Now where are you? The same people are spewing out the conspiracy theories of how the whole market's rigged, and that's why their accounts are down now, and that's why they can't make money. You can make money in any market, all right. But if you really want to make money in any market, the easiest way is to just be a long-term holder. The worst way is to try to out trade a tough market. That's, I think history has proven that out. I certainly don't want my clients depending on me knowing in advance whether or not the market's going to go up or down over the next, 12 hours. It's not what I want them depending on. I have my own reasons to believe one or the other could happen, but I'll do that with my money. I don't want to do that with someone else's money because I know I could be wrong and it's not what people want. Okay. But the FANG stocks came up today. That's why the market rebounded. Let's take it to the boards. All right. I don't know if we could do the picture in the picture. So wait, that's not what I want to see. Sorry about that, guys. That's what we want to see. Let me get rid of that. Okay. If I do a picture in picture, I can't do it. I've lost I lost camera one. But we'll just take a quick look, okay? The Dow up 238 points, Nasdaq up 1.25%, S&P up 24 points. This is a pittance of what the market did on Friday. Yeah, maybe you could have bought a few hours ago a little cheaper, but it is what it is, okay? Gold continues to sell off, oil down a few bucks. That's because of China. China's shutting down, so it's going to reduce their demand for oil. 10-year yield came back down a little bit. We talked about that at the top of the show, from 2.94% to 2.81%. The VIX, it was down just about to 20. Now it's 27. I wouldn't call the VIX anything except a sell signal at this price. Okay. Hold on. I'm in the wrong spot. So Jay is out there as well. Okay. So let's look at bonds. 2-year 2.63, the 10-year 2.81. So the spread 2.81 and 2.63. Okay, this one and this one, they're a little closer together. So spreads are narrowing just a drop. Doesn't really tell me anything. It's just they've been narrow for a while. Crypto's having a pretty tough month, but back over 40,000. And as goes Bitcoin, as goes the crypto world. I don't even know why I look at all these cryptos anymore. It's just basically they all, follow Bitcoin. Dogecoin up 16 cents. I don't know why I look at that. It's not doing us any good. And let's take a look at the watch list. We already went over these stocks, but I want to show you my ETFs list. Sector ETFs. Technology, the winner of the day, up 1.5%. I mean, that's not a huge day for technology. It's a nice day. It's not a huge day. It's after the drubbing that they took. It's nice to have a little bit of a rebound, I suppose. Communications, discretionary. What was at the bottom? Energy, utilities, real estate. It's all right. Industrials, financials, we need to see those work better. Financials have really taken it on the chin after investors have gotten so juiced up the last couple of weeks. Oh, there it goes with that goddamn camera. So that's the story for the day. We'll have more about this during the rest of the week. Oh, just a quick knock joke. Right, knock. Who's there? I don't who. I don't effing care about Twitter being bought by Elon Musk. Yeah, if I had to pick one thing of the day that has no bearing on your or my ability to retire successfully one day, it's the news that Elon Musk decided to buy out Twitter. It's really not that big of a deal. I know the media needs something, the press needs something. Look, I'm not one of these media bashers, okay? I know, though, that we need a story to pound on, and in an otherwise pretty dull day, having someone whose personality is as big as Elon Musk's buying one of the most controversial companies in the world, Twitter, You put anything with Elon Musk and Twitter together in the same story, it's a big seller. It's a big news item. So people are all over the story, but the reality is it's not going to really have much to do with what happens in your life and what you're going to do for your retirement, your financial well-being. So let's keep our eyes on the prize on the long term. S&P 500 is an index. You can invest directly into an index, but you could invest in a security that tracks or mimics an index. Diversification is a strategy that we use to mitigate risk, but it doesn't necessarily protect your portfolio from going down in a generally down market. And I just want to get these disclaimers in. So that's about it. This is a short show today. I thank you all for watching. And if you have any questions or concerns, let me know in the comments. I'd love to address them for you. We have one more out there. Hold on a second. We have Hunter. Best knock joke ever. Thank you very much, buddy. I appreciate that. You know what? Maybe I should make a cardboard sign with that. That could be my next cardboard sign, right? All right. I'll talk to you guys soon. Thank you very much. Bye.